and welcome to all the Web3 enthusiasts out there. This is Max speaking, and this is a new exciting episode of Synopsis. Today, I'm hosting this one with a very remarkable person. I believe all the enthusiasts know him, so please welcome Fisher Yu, co-founder and CTO of Babylon. Hello, Fisher. How are you today?
Doing very well. Hello, everyone. Thanks for having me. Yeah.
So everyone, you see, Fisher is in a good mood, and this means that today's discussion is going to be very live and interesting, and I do believe insightful. So to warm up and to welcome Fisher, since it's his first time here at Synopsis, could you please go ahead and tell us your Web3 journey, how you got interested in Web3 and crypto?
Yeah, sure. So I entered the Web3 industry from the academia route. So yeah, when I was doing my PhD in Australia, I invented a decentralized media delivery platform and patented it and sold it to Dolby Labs in the US. Yeah, so that's my first decentralized system I invented. And then I went to the US to do postdoc research, and my postdoc research topic was decentralized system security, aka blockchain security. Yeah, and then during my postdoc, I got to know Professor David Shea from Stanford University, and then since then we have been collaborating in academic research and also blockchain industry consulting. On the consensus layer, we will provide services to quite a few big chains such as Cardano. Yeah, so that's how I get into the Web3, academia, research, and then industry consulting. Then at the end of 2021, David and I came up with this Bitcoin's centric crypto world idea. So we founded Babylon. And now we are 3.5 years in the journey.
Awesome. So this is how it all began. And yeah, I think that although all our podcasts are devoted to Web3 and crypto, this one is going to be like an all-time high when the word Bitcoin is being pronounced during the entire discussion. Of course, we're talking to the co-founder of Babylon, and Bitcoin and staking. Bitcoin staking will be the main topic today. So, to begin with this series, a little bit philosophical question to you, Fisher. So, what is Bitcoin for you personally? So is it an investment opportunity? Is it a building material or whatever? So how do you treat
it? To me, it is an alarm or a reminder, because actually at the beginning, I view Bitcoin as a scam, as a vehicle for money laundering, because I didn't really understand it. But around 2015, then that's the first time I looked into it very carefully, and then I realized that no, Bitcoin is not a scam. It is really great technology, a great vision of a decentralized money and payment system. It is actually something great. But yeah, because of my closed mind and prejudice, I missed the early opportunity on Bitcoin. So to me, Bitcoin is an alarm, a reminder to me. So to always keep open-minded and no prejudice.
Wow, very philosophical answer, I would say. So it sounds great. So I wish the majority had the same approach. Okay, awesome. So the next question would be also about some drop back to the history. So normally when we hear the word DeFi, we think of Ethereum or some other popular layer ones, but not Bitcoin. Could you please tell us who came up with the idea of Bitcoin stake and how did it actually happen?
Yeah, sure. So David, my co-founder, he came up with the concept of Bitcoin. And so indeed, in the early days of Babylon, we were not doing Bitcoin staking. We were doing some, at the early stage, what we invented is a Bitcoin security sharing protocol using merge mining. And then only after a few months, we realized that merge mining never works. So we pivoted to another protocol that also provides Bitcoin security called Bitcoin timestamping. And that protocol was great, very efficient, but the feedback from the market was that this protocol is too good. It is like a free service. It's like air or water. You can get it for free. No one can make money from it. So then we think very hard about what can Bitcoin do that is closer to the finance world, to the DeFi world. Then we look at Ethereum. Hey, the first thing that Ethereum can do is staking. So then we ask ourselves, why not make Bitcoin stakeable? Yeah, so David invented the concept of Bitcoin staking. Then we work out the technology together, the Bitcoin staking, to make it a foundation for Bitcoin DeFi or entire crypto economy. Yeah, and similar to how ETH staking is the foundation of the entire ETH DeFi.
Awesome. So everything great starts with the questions and curiosity and asking questions to yourself. Exactly.
Yes.
Okay, awesome. So, and also the Bitcoin was itself an opportunity for many people, and you are opening new opportunities with this one. And so could you tell us what does actually Babylon let Bitcoin holders do that wasn't possible before?
Yeah, sure. So before Babylon, Bitcoin holder can only use Bitcoin to do two things in a safe way. One is just buy Bitcoin and hold it. Yeah, that's as a store of value. Right. The second is use Bitcoin for payment, but no one really use Bitcoin for payment. So basically, you just buy and hold and do nothing. So Bitcoin is basically an idle asset. And the reason why Bitcoin has been an idle asset is because unlike ETH, Bitcoin is not programmable. So you can't really implement smart contract DeFi protocols for Bitcoin to make Bitcoin productive. So what we try to do is to make Bitcoin productive in a trustless way. It means that you don't need to like wrap your Bitcoin to another chain, trusting some sort of multi-sig bridge to take custody of your Bitcoin for your Bitcoin to work. So we try to make Bitcoin productive trustlessly. And Bitcoin staking is the first such use case we invent for Bitcoin. It allows Bitcoin holders to stake their Bitcoin to provide security to other blockchain networks and earn staking rewards. So you stake Bitcoin, secure other networks, and earn staking rewards. And currently we have almost like 10 other blockchain networks, including Cosmos chains, Ethereum rollups. They have already signed up to become what we call Bitcoin supercharged networks. Yeah, that will enjoy Bitcoin staking and then pay staking rewards to Bitcoin in their own native token.
Wow, awesome. Thank you for summarizing. And we will speak about the chains a little bit later. And now a few questions about actually accessing this kind of staking. Let's start with exchanges. So could you please tell us how do centralized exchanges like Kraken provide staking services via Babylon? Is such staking centralized? Can we call it so?
Yeah, so I wouldn't call it centralized. So the definition of centralized means the entire end-to-end protocol is controlled by a certain entity. But in case of Bitcoin staking, the core staking protocol is fully decentralized through Babylon. The only centralized part is that a user of the centralized exchange trust the exchange at like a custody to do the staking operation. Then, so only that part you can call it centralized. So centralized exchange do decentralized staking on behalf of their users. So I wouldn't call centralized staking centralized exchange providing staking service as centralized staking. It has the centralized part and its decentralized part.
Wow, so it depends on the view and the angle you use to.
Exactly. Yeah, it depends on the end user. Do they want to do it by themselves, which will be fully decentralized, or do they want to, save the energy and let their trusted centralized exchange to do it for them.
Okay, great. So I like the take that the exchanges are acting just on the behalf, and yeah, sounds reasonable not to call it centralized. Awesome. And can users access Babylon staking from non-custodial and specifically hardware wallets?
Yes, of course. So the protocol is decentralized, and yeah, it's decentralized, trustless, and self-custodial, which means you can totally use your own wallet to participate in BTC staking. And as long as you keep your private key safe, no one, absolutely no one, can steal your Bitcoin or stop you from withdraw your Bitcoin. So it is trustless and self-custodial, very important. So in terms of hardware wallet, we already have one key and Keystone hardware wallet supporting it, and a ledger support is on the way. It's under security audit at the moment.
Well, awesome. So it seems like all the pillars of DeFi and crypto are here.
Yeah.
Okay, the real decentralization. Awesome. And cannot but ask this maybe some silly question or whatever, but still speaking about the risks. Could you tell us what
Sure.
related risks do your users face when staking Bitcoin? For example, what happens if the Bitcoin staked by Babylon user is stolen, if it can even happen?
Okay. So Babylon Bitcoin staking is trustless and self-custodial. That means there's no counterparty risk. There's no multi-sig bridge or someone else where you need to give your Bitcoin to. So you are the only one who can move your Bitcoin. That's very important. So the only risk associated is the slashing risk, which means your Bitcoin, a small fraction of it, might be subject to slashing if you attack the network you are securing. So in case you are not familiar, the audience is not familiar with slashing. So think about staking. What's the purpose of ETH staking, Solana staking, and other staking? The purpose of staking is to provide security to the network. Okay, how does staking provide security? The idea behind it is when you do staking, you actually collateralize your digital asset and become a validator of the network. Okay, if you validate the network, produce blocks, sign blocks properly, then you get staking reward as the compensation for your security service. On the other hand, if you attack the network as a validator, then a portion of your stake can be slashed. So this serves as a deterrent against malicious behavior. So that's why staking can provide security. It is because the stake is slashable. So when we invent Bitcoin staking, the key innovation we achieve is to actually make Bitcoin slashable without any counterparty risk. And Bitcoin is only slashable if and only if the person who the staker actually attacks the network it is supposed to secure. In any other cases, the staked Bitcoin will be 100% safe. And currently, our slashing ratio is only 0.1%, which means in a case you attack the network accidentally, only 0.1% of your Bitcoin will be slashed. The remaining 99.9% of Bitcoin will be returned to you.
Okay.
So yeah, it's very safe. There's no counterparty risk. Yes. Okay. Put it very simple way. There's no higher risk than ETH staking. The risk is exactly the same.
Okay, a very encouraging conclusion, I would say, because I believe that at least our users are mostly investors, not gamblers, and this type of people tend to ask themselves the questions of risks and safety. And thanks for clarifying. All sounds reasonable. Once again, guys, everyone should do their own research. And if you have any more questions about the risks and safety, just reach out to the team, reach the documents, do your own research. But see what the CDO and the co-founder says. For me, sounds very convincing. Sorry. Yeah, and about the documents, yeah. So one of the main things for each project is a roadmap, and when preparing for the interview, we've been checking it pretty closely, and I would say that you have an impressive roadmap for the upcoming quarters, including Bitcoin multi-staking.
Multi-staking.
Tell us more about what is coming.
Yeah, sure. So I would like to use a metaphor to describe Bitcoin staking first, so that Bitcoin multi-staking become very simple to understand. Okay, Bitcoin staking, you can think of it as someone work remotely for a company. So Bitcoin is your worker. It works as a security guard of another network in a remote way. So Bitcoin is not actually bridged to that company, that office, right? So Bitcoin is still with you, but it works for another company and in a remote way and earn some salary for you. So that's Bitcoin staking. Now, in real world, yeah, a person can only do like one full-time job, but we are in a digital world. So that means Bitcoin, so we allow one Bitcoin to work for multiple full-time jobs. So Bitcoin multi-staking means one Bitcoin can be staked to secure multiple networks and earn multiple streams of staking rewards. Yeah. So using a metaphor, it means you work for multiple remote jobs and earn multiple incomes. Yeah, that's Bitcoin multi-staking, which will improve the capital efficiency of Bitcoin dramatically.
Well, thanks for a great example. I just imagined being like a boss of at least a small enterprise. Like, yeah, sounds
yes.
Sounds so true when you're at least mid-term, or if what is even better, a long-term investor. So why not to make your Bitcoins work a little bit more than just holding? So sounds reasonable.
Work, yeah, exactly.
Bringing some extra cash flow. Awesome. And for the next part of the podcast, we have some questions about the Babylon chain and the baby token. So let's begin with the very easy, I think, for you, and also frequently asked maybe. So could you please tell us why does Babylon need a blockchain network of its own when staking actually happens on Bitcoin natively, if I'm not mistaken?
Yeah, sure. So Bitcoin is staked natively on the Bitcoin chain, but you still need a control plane in the middle to coordinate the Bitcoin that is going to work and the blockchain networks that are going to receive the security. It's like you work remotely, you need some sort of software or HR platform to work for the company, right? You need something in the middle, to put everything in one piece. So Babylon Genesis chain, which is a Babylon chain with the native token with ticker baby, is the control plane for Bitcoin staking. Yeah, it allows Bitcoin holders to register their stake and also allow other blockchain networks to plug in and enjoy Bitcoin staking. Okay. So this is the role of the Babylon Genesis chain for the staking. And what we in our roadmap, what we are going to add to the Babylon Genesis chain, including a full-size EVM, so that Bitcoin holders, when they get the rewards, they can actually do DeFi, Bitcoin DeFi on Babylon Genesis chain, participate or DeFi products on Babylon chain. And then early next year, what we will enable is Bitcoin liquidity, which means Bitcoin can be collateralized in a trustless way to, say, issue stablecoin or borrow stablecoin, so that the stablecoin from Bitcoin holders can be used to participate DeFi on Babylon Genesis chain. So eventually, our vision for Babylon Genesis chain is that it will become the home to BTC Fund. Whatever you want to do with your Bitcoin, you come to Babylon Genesis. There will always product for you. If you are you looking for yield? Are you looking to issue big stable coin? Are you looking to borrow cash against your Bitcoin? Yeah, everything you want to do with the Bitcoin, Bubble Genesis is your go-to place.
I see. Thanks for clarifying. Now everything is in order, and once again, sounds reasonable. And one more thing about the baby token. So it is distributed as the staking reward, and there must be substantial sell pressure. Could you tell us how do you maintain the demand for baby?
Okay, so as the protocol designer and builder, we don't actually maintain the demand of baby. Okay, so what we do is to create use cases of Bitcoin, and then for the Bitcoin use cases to work, the baby token will be needed to make it work. So for now, baby token is the staking reward for Bitcoin stakers, but in about 3 months time, we will launch Bitcoin multi-staking, where other blockchain networks will plug in and enjoy Bitcoin staking. And by that time, the baby token will no longer be the main staking reward for Bitcoin holders. There will be other blockchain networks. Their token will be the main staking reward for Bitcoin holders. And indeed, because Bubble Genesis chain is the control plane in the middle, so Bubble Genesis chain will take a cut of the staking rewards from other blockchain networks, as its kind of its commission.
Wow. So
it's not about just Bubble Genesis chain inflate baby token and pay for BTC holders. It's temporary.
So it's about the real utility, not about like maintaining and creating the demand, but addressing.
Exactly, it's about real utility.
Creating the use.
And later, yes, exactly. And we will also launch EVM later this year. Then baby token will be the guest token for all the on-chain DeFi activities. When we enable Bitcoin liquidity, then baby token will also be needed to unlock the liquidity and use to participate in DeFi. So we create useful products around Bitcoin and then implement it through Bubble Genesis.
Awesome. So it's really great to hear that, because nowadays I would say if not 99%, but the majority of newly issued tokens are missing this important thing as the utility. Here it is coming like straight from the first hands of the co-founder. It's really valuable, I think, for any holder and any enthusiast to hear. So good job, and we're moving to the next question. It will be addressed to your example with the Bitcoin staked as the workers who bring the salary, and salary is of course always associated with taxes. So the next question would be the following. So in many countries, staking rewards are taxable already. Does Babylon have a data expert functionality to let users track their earnings easily? And also, are there any other additional features like this?
Okay, so first, I'm not a tax expert, so I cannot provide financial or tax advice. To answer your question, yes, Bubble Genesis chain is an open and public blockchain. All the data is on chain. So if you through by looking at Bubble Genesis chain, you can see all the staking rewards you have received so far. So it's publicly available on chain.
Okay. Thanks for clarifying. So everything told here is not a financial advice, of course. The time for advices will be by the end, but not financials again. Okay, and now it's time for another maybe easy and evident question, but interesting for me. So could you explain to us and to me personally what factors make the Bitcoin staking yield go up or down over time, and does it remain profitable all the time, no matter what the Bitcoin price is, or how does it work?
Okay, in terms of staking, right, as long as you stake your Bitcoin, and you don't do anything wrong, your Bitcoin is always there, and you will always receive staking rewards. So in theory, yeah, it's always a positive thing. Right? It's always a positive thing. And in terms of whether the staking reward will be high or low, it's really up to the market, right? The token price, the U.S. Treasury, interest, and many factors. For example, in a very mature and sufficient market, right? If the BTC staking reward is lower, say, than ETH staking or US Treasury bond, then people will unstake their Bitcoin and go somewhere else. Then, because there are less Bitcoin staked, then the reward ratio for the remaining Bitcoin stakers will go up. If the staking reward is very high, then people will actually borrow money to buy Bitcoin and then stake to do Bitcoin staking. Then because there are so many stakers there, then the reward will go down. So yeah, the reward ratio, the number really depends on the market.
Okay, and I might add maybe that staking, as actually any investments, I would say, is not about trying to get easy, fast money. So everything should be tracked on a long term, on a distance. And if you're not a gambler, once again, it's, I would say, a great opportunity to just add some more extra income in a long term for your holding.
So indeed, I won't call Bitcoin staking as an investment. It's the staking reward you get by providing security to other networks. So you actually taking slashing risks and validate other networks. You do some work, so you get some staking. It's actually quite different from investment, where you just passively give your money to a fund manager, and the fund manager do some strategy for you, and hopefully you can earn some money. So staking is indeed quite different from an investment.
Yeah, absolutely agree. So I was just trying to make my own example, but you deal with it. Thanks for adding. And getting closer to the final part, so we have just about a few questions left. So the first one will be about the forecast. So we had a drop back into how everything started. We discussed what's going on right now. Now time for some forecasts and expectations of the next, I would say, 5 years. So Fisher, could you please tell us just your opinion, where's the Bitcoin staking industry going in the next 5 years, and what do you think will be Babylon's place in it?
Yeah, sure. So as we can see from the current trend, Bitcoin is getting mainstream adoption. Like everyone is buying Bitcoin, right? Then after everyone bought the amount of Bitcoin they want, then the next question is, okay, what do you do with Bitcoin? Right? What do you do with Bitcoin? You shouldn't be just let it sitting there idle, right? So our vision for 5 years is that Bitcoin get mainstream adoption, and Bitcoin staking and other Bitcoin products that we may invent in the coming months and years will be the default option for all Bitcoin holders to use. So you either use our Bitcoin staking protocol to generate yield, or you use our Bitcoin liquidity protocol to issue stablecoin or to borrow stablecoin, and do DeFi with it. So we hope Babylon in 5 years become the go-to place for all Bitcoin holders, and we wish at least 20-30% of the Bitcoin will become productive through Babylon.
Well, sounds like a great goal, and I like the take that I think it reached at least 50% of the viewers, like asking yourself what you're gonna do with those Bitcoin you have accumulated. So
exactly.
A good question to ask yourself and to think about before it became so much mainstream. Okay, awesome. And here we are at the final traditional part. So now is the right time for advices or maybe some call to action. So it's an open part just addressed to the audience to share some ideas you have, some piece of wisdom, whatever you find useful for our viewers to hear right now. So please go ahead, share something.
Yeah, so for the current market, I believe there are two assets that have the best product market fit. One is Bitcoin as store of value, like digital gold. Second is stablecoin, yeah, as the payment and circulation media. Yeah, so anything that combine Bitcoin and stablecoin will be great, and this is what Opera try to do. And in terms of some advice to the viewers, I think the most important thing is to always remember not your keys, not your coins. Yeah. Whenever you participate in any project, any DeFi, behind the very attractive returns, you always ask yourself, do you really understand the risk? Okay. So if you don't understand the risks, that means you are the risk.
Absolutely. Well, thanks for sharing, and I would say a very positive ending we have here. So we'll be tracking the success of Babylon, and thank you, Fisher, for joining in. It was very insightful, very easygoing. So this half an hour, just enjoyed it, and I believe that our viewers will completely agree with me. So thanks also for everyone for watching till the end, guys. If you have any more questions left after this interview we had here today, so please drop it in the comment section. Also follow Fisher on X, follow Babylon, follow Synopsis. Stay tuned, guys. Follow the advices of our guests. It's valuable, although some of them might seem obvious. Asking yourself questions and going back to the basics is really good. So yeah, thanks for everyone. Have a good day, great day. Bye.
Yeah, thank you so much.
Very nice evening.